All right. What's up, team? Sean from Invest to Live. And I was watching the market close. I was looking at some of the moves that were happening. And I suddenly had this epiphany as I was thinking about it. I use E-Trade primarily for my options trading, and they had changed the colors in the background because Morgan Stanley had bought them. And I started thinking to myself, that's interesting. I really wasn't paying too much attention to that or why they bought it. And then I see Kathy Woods buying tons of Robinhood shares. And I want to be clear, I don't know anything. I'm not even saying this is happening. What I want to suggest is an opening here for what would an arbitrage opportunity look like with Robinhood stock so low. Is it possible that they're a target? And so I've got some really good details on Robinhood that I'm taking directly from their IR presentation. I also want to share some old news with Morgan Stanley and E-Trade, because I'm starting to sit here and think to myself, if I don't know what's going on, it means someone else does. So I'm trying to connect the dots of what don't I know and what can I potentially ascertain or build into an interest in this position. So before we jump in, as always, please always appreciate the subscribes and likes and all that other good YouTube stuff that I'm not good at. But really appreciate you doing that if you do it. And I don't want to waste any time, so let's jump right on in here. And I'm going to actually share a couple of screens here because this is pretty interesting stuff. And again, I'm not a financial advisor. I'm not your financial advisor. I'm not even making financial advice in any capacity whatsoever. I'm merely doing a thought exercise as far as what the numbers look like when E-Trade was bought and how they're quite different at Robinhood, but fill a different niche almost entirely, and the key differences between the two accounts for those who aren't used to using both. So if you're a hardcore, in the weeds, options laboratory type of guy like me, there's lots of reasons E-Trade is awesome. You're new to trading or investing and Robinhood's on your phone and makes it easy, that's amazing too. But that's not the end all be all. And we've watched this happen so many times where platforms are consistently bought, acquired, sold, acquired again, etc. When I got started trading, I was using a platform that doesn't even exist anymore. It's been acquired 4 or 5 times. And I watch it continuously change, but they keep getting my business no matter where it ends up. So I thought that would make for a great sort of segue here. So I'm going to share my screen and we're going to jump right in. And again, I don't want to waste any time here. All right, so first and foremost, you see the date of this article. It's February 20th, 2020, right? And here it is, right? Here's why Morgan Stanley is spending $13 billion to buy E-Trade. That $13 billion is particularly important because Robinhood's market cap today, as I looked at it, was in fact just around $13 billion. I'm actually going to pull it up on my phone right here and see if I can't give you the actual number here. Let me see. Of course, everything's going to be slow in my house today. And I promise you, I've got some good stuff here that you want to check out. Let me see. Robinhood, where are we here? Oh my gosh, the app is running so slow. Market cap is $12.38 billion today. Think about how funny that is. These are all the things that are going on in my mind when I think about due diligence. I think about opportunities. This is what I'm trying to get you to be encouraged by is if you think like every other investor, you are behind the people who think faster, better, deeper, in bigger ways. You have to remember that. It's so important that we all have the same data. We just all interpret it in different ways. So I saw the market cap of Robinhood. I saw ARK buying up Robinhood shares. And I saw the change of the coloring on my E-Trade login. And I said, well, shoot, I wonder how similar these companies are right now, today in 2022, January. So here it is, right? Morgan Stanley paid $13 billion to buy E-Trade. Right on the screen here, right? Morgan Stanley, a classic investment bank, is where typically wealthier Americans or corporations do their investing, trading, money management. This is where you can get stock plans, right? Typically, ESPPs or employee stock purchase programs are done through E-Trade. I have some in there as well. And the reason this made a ton of sense, and a lot of people ultimately thought it was a great idea, was Morgan Stanley was able to grab Robinhood. Listen to me, I'm already doing it. Morgan Stanley was able to grab E-Trade's 5.2 million customer accounts with 360 billion in assets. I'm gonna come back to this once I show you some other stuff. And a big part of this as well was they have one of the top programs out there for corporate stock plans. There's other things like Computershare, et cetera, that do this really well too. But the ease of access in E-Trade, I'm going to be frank, it's just so easy. And at the time, this was a massive takeover. So look, there's a whole article here. Certainly, it goes into some of the details, yada, 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 yada. I don't think it's that important, if I'm being totally honest with you, the rest of this. What I really want to call out here was this was really almost kicked off because of Robinhood, right? The inability for them to charge for trades and having to lower prices across the board meant that they needed to be acquired by a much bigger player. And what that bigger player got was access to tons of what at the time was more retail-ish traders. So that meant they added another 5.2 million customer accounts, and again, they're 360 billion. Now, let's pivot, okay? Robinhood, right? It's an app, goes on my phone, super easy to use. I can do a lot of cool things with it. Now, it doesn't have anywhere the level of sophistication that I need in the way that I operate. However, quick little piece of research, look up stock price. I just looked up the market cap of Robinhood on Robinhood, funny enough. And it makes it really easy to get involved, right? They've got some good things. You can buy and sell. They have a margin for those who want to use it. That's extremely risky, by the way, if you're not used to it or know what you're doing. You can do options trading. But what's really unique is now E-Trade has corporate accounts for ESPPs. Robinhood has crypto. It's a whole different stream of income. It's a whole different way of going to market. Now, the point of this video is not to talk about how Robinhood makes their money or how controversial things have been or whether you like the CEO or not. Listen, cool, that's you. We're not talking about opinions. We're talking about the ability to think through a process of where arbitrage might live. I could be totally 100% wrong here. Probably am, frankly. But this is how I do my due diligence and start to think through my big, big plays. So let's click over to the earnings presentation because I think there's some really cool things in here. So I'm going to call this out right off the bat. I did not put this together. This belongs completely to Robinhood. I do not work for Robinhood. I'm not affiliated with Robinhood. I don't receive compensation from Robinhood, yada, 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 yada. This is how I do my research. So let's jump in. Crypto wallets are on the way. Great. Phone support's here. Cool. Things I don't really care about, right? We see a lot of educational stuff. We get some highlights, not the stuff I care about, right? It's good to see they're doing all these things, but let's be honest, I don't care. Here's where it gets interesting. And this is where I now can't turn it off, right? I'm really starting to think through what are the numbers? What's driving me? What am I looking at when I see these numbers? So let's get into the things that I'm paying the closest attention to. Now, we saw earlier that E-Trade had maybe not a ton of customers, but a lot of associated assets under management, or AUM as we'll be calling it, right? So 5.2 million customers, 360 billion in assets, okay? 5.2 million, 360 billion. Robinhood is getting there, right? Look at the numbers, right? In most recent quarter, Q3 2021, they had 22.4 million funded accounts, monthly active users of 18.9. Remember, we're up against a 5.2 at E-Trade. In assets under custody, custody is an interesting word because they're just essentially custodians of this revenue, right? They're not managing the money. This would be the same metric I'd release for E-Trade as well. E-Trade has some functions where they'll do some of the investment management, et cetera. But for the sake of a one-to-one compare, I think AUC is absolutely fine for sort of a first layer of due diligence. Now, assets under custody are really interesting, right? We see that obviously they got crushed a little bit here, dropping from 102 to 95. But I'm gonna let's pump the brakes here. Keep in mind when you're in very volatile things like equities, like options, like crypto, there is going to be some up and down in assets under custody if they're not getting new assets to come in and replace things that have shrunk or otherwise left the platform. So just keep that in mind. So we're going to call it out again, right? Way more users, much less from an assets under custody perspective. But you can see where I'm going with this, I hope, at this point. If not, let's talk through it. There are a lot of other brokers out there who do not have a lot of popularity, who are not necessarily well known, who would really do well to grab a company like a Robinhood at this sort of price point, which other discount brokerages have already sold for, by the way, to major investment banks. That's the key catalyst that I'm tying a lot of my thought process to. Has this happened before? Yes. Are the numbers at least somewhat similar? Okay, well, by market cap, absolutely. Are they similar by terms of users and assets under custody? I think so. It's a reverse. But as those maybe potentially younger or newer investors on the Robinhood platform start to become more educated, more confident, start to also get older, there could be a natural flow or certainly some expectation that perhaps we could see more revenue coming to the platform. Once those crypto wallets go out, we could see more money coming to the platform as well, or off. Let's be fair, those crypto wallets could be a bad thing too. But that said, still, right, more reason to log in to Robinhood, more features and functions, more things to be thinking about. And especially now they're going to be coming out with retirement accounts, according to this presentation. Again, safe harbor, I don't know for sure what they are or are not doing. And more I start to see a company that maybe shouldn't be on its own. Maybe Robinhood really shouldn't have gotten to an IPO. So what I start thinking about is, on a relative basis, on current price to IPO price to even, as it's come down over time here, what would be a great premium for a much bigger company to pay for Robinhood? Is there an opportunity for me as an investor to get in at today's prices and calculate what that arbitrage upside might be, right? So this is a very typical case of M&A arbitrage. And the idea behind it is, I think that someone might come in and swoop this company up. And I think that in order to do so, they're going to have to offer a very big premium to the current price to make it worthwhile. In the E-Trade Morgan Stanley piece, they essentially did a share for share a purchase. So it actually didn't really cost Morgan Stanley anything in theory. They just simply gave shares to holders of E-Trade. And that's what happened there. I'm not saying that will ever happen again. I have no idea what's going to happen here, but I just want you to start thinking about things like this. All these companies right now that are suddenly seeing like terrible numbers, right? Market caps are coming down, stock prices are coming down. We're seeing a pounding every day. Big major firms are not thinking about, will this go up by 1%? Like Kathy Wood is buying Robinhood aggressively. I'm not saying she's right. I'm not saying she's wrong. And there might be a perception that she's been wrong a lot in the near term here. But this is an account that is very comparable to other similar types of discount brokerages with similar enough numbers, with similar markets, similar entries to markets. And this would offer another bank or investment bank or whatever a huge amount of users that are looking to get into investing and trading. So if there was another bank out there or larger broker who was in the market, even think of like an Interactive Brokers. And again, I want to say this total clarity. I have no idea. This is just how I think through these things. This is how I start to position what I'm looking at and what I want to do. I look at like an Interactive Brokers and I say like, boy, if they could ever get Robinhood under their flag, bring in all these new users and over time trickle them into the more advanced trading, the more advanced products that they offer, that would be a pretty cool opportunity, especially because I think a lot of Robinhood traders are really seeking more, but it's such a convenient platform. Maybe they don't need to think about that, right? Now, again, one of the reasons why there could be an opportunity here in my mind is we're seeing some things that aren't great. So let's call attention to this screen right here. Average revenue per user. I don't care what business you're in, okay? And this is really important to understand. Margins will always shrink over time if we're not aware of the effects of the market, of the macro issues that are going to affect me, and then a lot of micro issues as well. The issue for Robinhood is that as they've gotten pounded on a number of different things, they're having to be more customer focused by hiring teams to handle phone calls. They're having to be more focused on how they earn their money because Congress is coming after them, right? So that revenue per user, and these are annualized numbers, as you can see by the note here, that revenue per user down to 65. What I want to see is another quarter, maybe 2 quarters, and see where we are. If we can stabilize around that 65, then I can start to build out sort of some of those metrics or the math I need to get a feel for what this price should be. So what I'm trying to start to understand is, as we look at AUC and we look at total users, we look at login rates of users, and I look at my revenue per user, I can start to build out a really good financial model for what I believe this company should be worth. The biggest challenge I'm having with Robinhood, to be totally frank, and why I'm only thinking about this as an arbitrage opportunity, is because I don't have enough consistent data here to do anything. That $65 revenue per user is really tough for me to work with because it's been 1 quarter like this. It could have been a one-time event. It could have been due to lawsuit. It could have been due to hiring a team, or this could be the new standard for discount brokerages. So these are the pieces of information I don't yet have. But I want to stress this again. I hope you're still watching at this point, because this is what serious research and due diligence looks like. You need to build your own models. It's okay to use what's already out there, but I want you to think about this. If you go out and look at every stock and you say, what's its PE ratio? What's its EPS? What's its revenue? What's its average revenue per user, as you're seeing on the screen? Everyone else can do that too. Once you get comfortable with this level of analysis, right, the ability to look at and understand the data, start thinking through things that are unique, are ways to measure it against its peers that maybe no one else is doing. That's where you find the alpha. That's where you find the gains in the way that you invest and trade. So let's keep going here. So we can see lots of different movement here from a total net revenue perspective, right? Transaction-based revenues, et cetera. All this stuff is on their website. And if you're not looking at these things, you really should be. Now, this is particularly interesting as well, right? We've got some net interest revenues. And this was the one I was waiting to get to. This is one of those ones where I'm like, whoa, right? Like operating expenses have utterly exploded, okay? And in part, as you can see here, it's actually spread out not too dissimilarly from previous quarters, right? We've got, excuse me, technology and development, operations, marketing, general and administrative, right? Or G&A for those who are familiar with the term. So I'm looking at this and I'm like, holy moly, they're doubling down on tech and development. I think that's amazing. That's a sign that maybe they're trying to grow or change the way they do things. Cool. I'm wondering why it's almost 3 or 4x what it's been previously, but okay. Marketing doesn't look too different, so they're staying about the same there, right? Operations is relatively stable to the previous quarter. And then G&A, general administration, is massive. But they do have a note up here, and I want to call this out, right? These are the level, these again, these are details we do when we do due diligence. And when you're thinking about working on an M&A arbitrage opportunity, the devil's in the details in a lot of different ways. So what you can see here is Q3 and 21 included 1.2 billion in share-based compensation, of which 1.08 billion was recognized upon the IPO. There's some information in here about more information on this, but again, the point is something big happened here. They called it out as to why. Yeah, I mean, I don't know, right? Like this is a humongous jump, and to think that that's all it's due to, I don't know. Feel like there should have been some more notice on that, right? And then here comes some of the issues I'm seeing. These issues could easily be solved by a big acquisition to a company that has the funding or the capital to help bring them into a more standardized platform, leverage what's already in place. Again, these are the things I'm thinking about. Is there an upside or an opportunity for a company to be acquired when its share price has lost significant value and with it its market cap? Could there be a play here to bring it under a flag, have standardized processes that already exist and bring in somewhat of that synergy or that leveling of costs, right? Obviously, I'm not going to call out what needs to be said here. Not great, right? We're in a tough spot from net income loss perspective. And again, EBITDA is down as well, right? So I'm not going to go into all the different pieces here. I literally read every line item here. I read every single piece of the appendix when I do my due diligence. And if you're not used to doing this, I strongly urge you to go ahead and do it. But this is what I want to share. I'm going to stop sharing my screen for a second. I want to just think this out with you for a few more seconds here. When the markets are getting crushed, like they are right now, you have to ask yourself, do you believe that there's an opportunity for names to go out of business, to be acquired, to double or triple in price when things turn around? What is the long-term viability, vitality, and velocity that things are going to move within the markets? I look at a Robinhood. I look at the amount of people using it, the amount of capital associated with it. I look at comparables in the market, which literally is E-Trade. That just happened. I know it's not the same, but that's as close as I'm getting for the conversation. And this is how I start to build out my thought process around M&A arbitrage. Very risky. If you're wrong in a big way. And again, I'm not saying you should do this. I'm saying this is step one to maybe start thinking about it. Am I wrong? Like, what am I missing here? In your opinion, if you're watching this, what am I getting wrong here? What's the thing I'm not thinking about? Why would you think that I'm not doing this the right way? I'd really love to hear what you think in the comments. I'd love to hear how you think about this. If you think I have any shot of being right on this, just be really interesting to hear it. I do want to call out how I would play this. Okay. Now, I am absolutely positively not recommending this because there's not enough information. I have absolutely no idea what's likely to happen here. But this is a case where I want to recognize potentially as much upside as possible and limit my downside. So this is a case where someone like myself will typically look at things like buying calls, or I might buy leaps. Leaps are just basically long duration calls, essentially, think a couple years out. And this way, what I can do is I can only risk my premium, but still see all the upside if the price goes up, right? Even more so, I could potentially take a straddle on a position like this because I'm not sure if it's going to go up or further down. I can just pay the premium for both sides and then recognize the differential between them if a move is wide enough on the up or downside. And then, of course, like anything, right? If someone really likes Robinhood, like Kathy Wood does, maybe just buy the stock and set a stop loss so you don't lose more money than you put in. My point, though, is as you're thinking about this, you have to not only do the research, the due diligence, you have to understand what these things mean, the acumen that's tied to it, the way an M&A program would work, how their peers have been bought in the past. Additionally, how you would enter a trade like this and knowing how you get out of it too. So we're going to be doing a lot more videos like this. I think some of the feedback I got was that people seem to really like when I go deep into the weeds here, coming from an industry expertise perspective. So I'm just going to call that out. We're going to do some good stuff. I'm working on a Palantir versus C3 compare with some of my own metrics that are going to be definitely things you've probably never seen before. So I want to share a little bit about how I do this, how I think about it, how I've been able to be pretty successful in the markets by not paying attention to what everyone else pays attention to. So with that, hopefully this wasn't too long, got some value out of it. I really would appreciate what you're thinking, what your thoughts are on it. And with that, good luck out there. Happy hunting. It was a tough day today in the markets. Hopefully you've got some upside on your end. Thanks, everybody. Thanks for watching.